G'day, Rudy here. So, continuing on in the energy theme, this one's all about coal. If this is the first time you've seen it, welcome. Let us know what your thoughts are at the end. Alright, so why do I like coal? Well, coal's going to be the backup power, along with gas, to renewables. Because that's we're running down this path of renewables, but only until nuclear. Because once nuclear is in, then you don't need any of it really. But that's still decades away to be fully entrenched. So there's still going to be a demand for coal. And then there's we're closing our coal plants. So what's our backup? Natural gas, and they did open a basin the other day, but this walking down renewables path is a waste of time, if you ask me. Sorry if you're one of those people, because what you got out there is 70% of India's electricity comes from coal. That's 1.5 billion people. 60% of China's electricity comes from coal. That's 1.5 billion. So that's 3 billion people that need our coal. Will need coal. Also driving it, you got India's steel industry wants to triple output by 2030. You need coal to make that stuff. Now, like a lot of our commodities, it's valued for its high energy content and low ash content compared to Chinese and Indian coal. So they still rely on imports to meet demand, even though they do mine it, as I just said. Alright, so there's still a strong theme out there. We're the only country that's closing down coal plants and don't want to entertain nuclear. Anyway, okay, so let's look at the chart. Put him away up there. Okay, so you can see coal, like a lot of resources, which is why I like them, is they're down in the doldrums. Look at that. If we go to a weekly chart, so it's made it short to the weekly chart. So we've broken out the declining wedge. We've had a pretty severe pullback this week, this red bar, down to support, although it hasn't impacted the coal stocks. So this is your thermal coal price. Your coking coal price is a similar picture. There's the long-term one, we're at the bottom. But these companies are still making money at this price. And then we've got the coal India. So this is the price of Indian coal, which looks a lot more bullish. That's a breakout from a squeezy there. So how can we play it? Well, there's this ETF. It's only in America though. I'll go through. They've got all of our miners, coal miners are in it, and I'll go through. You'll see these are the miners. There's about 27 of them. Even BHP gets a gig in there. So we'll go through a handful of those, the non-Australian ones. Okay, so we benchmark, so coal over the king, MVR. So coal was outperforming, the MVR took off. That is a declining wedge, which is bullish if broken, which it hasn't yet. Coal over VAS, so coal's been outperforming VAS, forming a bullish pennant, which is usually in that direction. Coal over VGS, similar pattern, broken up, usually in that direction. Alright, so let's go through the non-Australian stocks first. So in the ETF you've got Warrior Coal. So they're a leading US supplier of metallurgical coal, looking bullish. Alliance Resource Partners, so they're a second largest coal producer in the US, bouncing off support. And then you've got Remarco Resources, So it's a US coal producer. It's got a US rare earth mine they're developing, hence the price chart. They should have this in the REMX ETF anyway. And Alpha Metallurgical. So they're another US metallurgical coal producer. Again, breaking out of this declining wedge, and that looks good. So they're all looking bullish. Now onto the Australian ones. So New Hope's my preferred coal stock because it's the cheapest producer, paying a div of 9.6. And it's not just coal, it does port handling, bit of oil and gas, and a bit of agriculture. So it's not a pure coal play. And forming a lovely bull flag, multi-generational, multi-years I should say. So again, like all these things, you buy them when they come down. So we had a buy there, we had a buy there, there was a buy down in here. So it's long term still worth it. Yelco, so these are in order of cost of production. So they're the next. I should say. So New Hope is like 60 bucks a ton. And then Yale is 100. So these are ASX ones that are in the ETF, or you can buy them. They reduced their dividend back here and got smacked and punished for it. But I still think the new div's around 6%. So that's bouncing off support. You got Whitehaven. So they're not paying as high a div as New Hope. Another reason to choose New Hope. 110, so they're a bit more expensive. But anyway, they've come back down to the buy zone. This one's held in the King MVR. So this stock is held in the King. Then we got Coronado. It's another one. They're 120. 3.6 div. But from the charts, looking nice. The declining wedge, the break, and it's had a few sideways up, and it's doing another sideways. So you'd have to say the direction is up. And then Stanmore, 130 costs. So they're the highest cost producer, but they're at support lines here, so they broke and come down. So obviously New Hope looks better because it's the most efficient producer. But again, if you're buying an ETF, you just got all of them. So alright, then just for a bit of fun, now if you're a dividend type of guy, girl, this is New Hope over Telstra. So what's Telstra paying? 4%. And New Hope's 9%. And that's a declining wedge breakout with consolidation. So that's outperformance over Telstra. And New Hope over CBA, what's he paying? 3%. And New Hope 9%. So again, declining wedge breakout support. Up. So alright, so if you're in any coal stocks, let us know. If you never heard of them, let us know. Alright, it's a wrap on another energy source. So